Welcome to this week's episode of Ask Amy. Today we are talking about your property taxes. It's a subject a lot of people love to talk about, right?
Oh, they do all the time with me, Amy.
Yeah, absolutely. That is who's joining me today is Senator Paul Bettencourt. Thank you so much for coming on to talk with us.
Sure.
I invited you because this legislative session, you guys have introduced 3 bills, Senate bills. All of them have passed out of the Senate, but they would essentially, if passed, lower our property taxes.
Right. They're whoppers because it's a combined $16.5 billion worth of property tax relief. And never would I think that we would be in a position to give out that much property tax relief in one session. It's astounding. It's off the charts. It's really cool because this is going to be measurable impact on people's property taxes for a long, long time.
So we want to talk about it today because some things have to happen. I feel like it's top of mind to a lot of people right now because many people just received their valuations in the mail from whatever taxing district, whatever county they're in. And you're like, every year, it's like, oh, are you kidding me? So this impacts the tax bills that come later.
Right. Well, because there's 2 steps. There's the value of the bill, which is up right now. But what you'll see is tax rates are really going to come down with exemptions. So while appraisals are always important and you need to keep track of them, it's not like the old days that when your appraised value went up 10%, your tax rate stayed the same, so your tax bill went up 10%. Actually, things have really changed, Amy. In the Houston area and the Austin area and San Antonio, everybody's average homestead bill actually went down this year compared to last year. So when you look at the value, understand that it's just part of the equation now. You have to look at your tax bill, flip it over, and you'll see that you actually paid less than you did last year on average.
Yeah, and so basically you're telling me what I should worry about or concern myself with more is that tax rate that I'm being charged, whether it's from the school districts or the county or the city.
Right, you have to follow that because that's the key step. Because what's happening is with these Senate bills, 3, 4, and 5, we're really cranking up the amount of exemption that homeowners are going to get. We're also lowering tax rates as values go up. We're really crashing the tax rate to offset that. And the result is that people's homestead bills will be down, no question about it. The question is how much. We'll talk about that. These are eye-popping numbers, too. And more importantly, they're going to be here year after year. So this is going to be good news long-term going forward.
Okay, so let's talk first about where all this extra money is coming from. I mean, in years past, when nobody's ever thought about, oh, yeah, we'll cut all these exemptions and cut property taxes because they say, oh, we need that money for streets and roads and schools and everything else our taxes pay for. So how do we have so much extra right now?
Well, we have so much extra because Texas economy is booming. Okay, so we've got jobs coming in from all over the country. We have record sales tax increases. We've got off the charts oil and gas severance taxes due to volume increases. So all this has come into the state coffers, into the Treasury. And so we really have $16.5 billion comfortably to spend on property tax relief for several years to come.
And that's not even all the surplus, isn't it? Total something like $33 billion?
Right. The surplus is at least twice that amount. So the good news is it's sustainable. And here's the key thing, and everybody here, it's not going to cost school districts a dime. We're taking all this extra money, and we're basically asking the public to approve grabbing some of that excess cash and bringing it in and getting their money back in the form of tax relief.
Okay, so we're going to get started on that. For people who don't know, if you haven't lived in Texas for very long or Harris County, I mean, sort of what makes you in a unique position. And he was elected senator in 2014, started serving in 2015. But before that, for 10 years, you were the Harris County tax assessor collector.
Right.
Yeah, so.
I was a tax man for a tax cut, however, back then.
Yeah, so, I mean, well, tell us about that. What do you mean? Because everybody thought, oh, I got to send you all this money.
Well, if back and still in Texas, you actually write out your check in the name of the tax assessor. Now, if I kept all that money, I would have been in Leavenworth as opposed to the Senate.
Right.
Okay, but even then, we were talking about property tax relief and the need for it. I say we, Lieutenant Governor Dan Patrick and I and many other people. So now we're in a position to do something about it, and the results are going to be just a whopper on people's bills. $800 for the average homestead per year for the rest of the time they own the home, or over $1,000 for over 65 homesteads. It's really going to be a fabulous tax package for everyone. Everybody's going to be able to see it.
Okay. All right. So I want to go go through that, and I also want to talk about some of the critics and some of those arguments, people who say like, oh, this won't work because of this. But let's start.
Sure, no problem. It's like live radio. I do it every Friday.
Right. Okay. No, I know. I'm not going to stump you. But there are 3 Senate bills, and I kind of want to go in order, even though you guys sort of wrote them all together to go hand in hand in hand. So the first one, we're looking at Senate Bill 3. So this one, I guess, kind of seems like the most popular because people can really understand it. If you've got a home and you have that homestead exemption, this is where it would help you. And if you don't have a homestead exemption in a home you're living in.
If you don't have a homestead exemption, get one, because it's the easiest thing you can do. All you have to do is write a simple form into your appraisal district and have your driver's license match the address of your homestead, and boom, you get granted. Now, here's what we're doing. Average home is about $331,000 now. So we're going to raise the homestead exemption from $40,000 to $70,000. Okay. That's for the average home. And then we're going to be driving down tax rates on top of it. Now, the bigger home you have, the more you get, because as the value times the rate equals the bill. So the good news is, for the average home, this is about a 25% reduction in school taxes, boom, like that.
Okay.
So and that's just one component. But wait, we're not done yet. Okay. If you're over 65 and you paid a lifetime of taxes, we're going to add a $30,000 increase to your exemption. Right now it's $10,000. So the $70,000 plus the $30,000 is a $100,000 exemption on seniors' homes. And that's a huge number. And that means that the average senior home will be getting $1,062 off forever, for as long as they own the home.
These are average. This would be less money that you owe in taxes.
Right, because you won't pay them. See, this is an important point, Amy. The most powerful tool I have as a tax writer is to exempt people. If you exempt them, you don't pay. So the great news about exemptions is that once they're there, they stay with you wherever you move. However long you own the home, they'll stay with you, and you'll never pay that tax.
Okay. So just for people who might not understand that, just to elaborate a little bit more. So you said the average home in Texas is $331,000?
$331,000.
So then if you're giving somebody $70,000 off of that, you can only be taxed on
the remaining, in this case, 75% roughly. Okay.
Yeah.
And importantly, that means that you only pay taxes in that case on $261,000, and for an over 65 home, no more than $231, actually less, because many over 65s are already frozen. Their values are frozen, so they have a more complicated payout, but a very positive one. Again, $800 average home, $1,000 for over 65, and why it's important is this, Amy. There's 5.7 million homeowners in the state. So we're talking about a huge number of people are getting that off for forever. And there's over 2 million over 65 disabled homeowners, and they're getting $1,000 a year off. So that's why those plans are A-rated by the public. When the public hears about them, boy, they're excited because they know they're going to get that money off, and that's a big, big deal long term. It's like $24,000 on a 30-year mortgage, and of course, $1,000 a year, people can do that math in their head.
Right, exactly. Okay, so we want to talk about the other Senate bills when we come back. It's a good time to take a break. There's still 4 and 5, and we want you to keep listening because there is something that taxpayers, constituents actually have to do for this to go all the way through and to happen.
Right.
All right, we'll be right back. Welcome back to this episode of Ask Amy. Joining me is Senator Paul Bettencourt. We're talking property taxes, and we're talking Senate bills that have already passed out of the Senate to help lower property taxes because we have this huge surplus. So we just talked about Senate Bill 3 that would increase the exemption on homesteads. And then going hand in hand with that is Senate Bill 4. And what would that do? It sounds like it's sending more money to schools from this surplus.
It does. Basically what it does is that it sets up a constitutional fund that lets us fund a tax cut. And what happens is as values go up, we're driving the rates down. Now, we also are fixing parts of what was Robin Hood, which is something I've been against for 20 years, which is we used to take from school districts and give to other school districts to do school finance. Well, we changed school finance formulas, so we don't need Robin Hood anymore. So basically what we're doing is we're drilling a hole in what's left of the old Robin Hood code, and that way as we pour money into this bucket, it will actually get to people in the form of tax rate compression. That's the concept. And that's for maintenance and operation. It means that your amount of tax you pay compresses every year. And right now we're looking at that to be about 17 pennies of change in the next 2 years. So that's a huge amount of tax relief coming just on the school portion of your tax bill.
17 cents of every dollar, you
right,
mean?
17 roughly, because
Okay.
because that's roughly how much people spend on a ISD tax bill right now.
Okay.
It's about $1.13 to be precise. So this is a big reduction. So you've got the exemptions that we just covered, plus this big tax rate reduction, and that's why you get these whopper numbers for homesteads of $800 for the average home and over $1,000 for over 65s.
Okay, so I was just asking you about this. Basically, when you look at your tax bill and you see that tax bill at the end of the year, sometimes you have to write 2 checks because you're paying bills to the county, you're paying bills to the city,
you're paying,
and then you're paying the school district, whatever
Right.
school district you live in, whether you've got kids or not, they go to that school district.
Right.
And so the only one that the state can actually do anything about are the school
the
taxes.
schools, right. Now, we have done some things about city and county taxes. In 2019, we passed 2 major bills, Senate Bill 2 and House Bill 3. And that changed how much cities and counties could raise your taxes. It also changed how much school taxes could go up. So in addition to that, we're doing now all this extra work with $16.5 billion. I didn't have even, half of that amount of money for tax relief until now. So this will be a very clear change in your tax bills. Everybody will see them, and it won't be just a small amount of money. It's going to be, hundreds of dollars, if not over $1,000 on average homes.
So basically, just to explain to people, what we're doing is we're telling the state, hey, you take that extra money that you're making, and take $5.38 billion every year and send it to school districts instead of taking that from taxpayers?
Right. So here's the important point, because you kind of teased it last. You're going to get to vote. Folks, you're going to get to vote on this in November. And what you're voting on is this. You'll see these big exemption increases. And the language will be, do you want to raise the exemption of the average home from $40,000 to $70,000? And the answer, I hope, will be yes. And then do you want to raise the homestead exemption for seniors by another $30,000, which I assume is yes too. And then we'll be talking about business taxes to get rid of a nuisance tax on small businesses called business personal property taxes of about $25,000. And then you'll also be asked to put together, agree to a constitutional fund that will fund all this.
Okay.
So the public's going to get to vote on it. And when you do, you're going to go get the excess cash that we've got. And just you need to know that the school districts won't be hurt. And we're not touching the rainy day fund.
Okay.
So if there is big trouble in the economy, okay, we will have taken excess cash. We won't have changed our ongoing budget allocation, and we keep our rainy day funds intact too. So we're covered 3 ways from Sunday, literally.
Okay, so then let's talk about this, though. So I said I'm going to tell you what, some critics, and obviously you've heard from those critics. One is they're like, well, wait a minute. So you're asking the state to take from the surplus that we now have, this $5.38 billion, and sending it to school districts. But what happens in years that we're not as flush with cash, that we don't have that much money to send to the schools, and then our homestead exemptions have gone up, so they're not getting as much from us on that end? Like, how do we make up for that?
Well, I had the same question in 2019 when I passed those other 2 bills. And people were worried, there won't be enough oil and gas severance tax. Well, that was wrong, because we had huge pipeline increases from the Permian Basin, and now we're taking in record amount of revenue. And here, the same things happened. Post-COVID, the amount of sales tax revenue has jumped by double digits, okay? And even just recently, with all the job growth we've had, we're in a single-digit growth. So what's happened is you have to understand that things never stay the same. Things are never static. So when we look to Texas Texas has the best economy in the nation, number one on job growth, and we're hauling in a record amount of revenue. So what we're done is we haven't spent all the surplus, and we haven't even spent all of what we could spend. We're looking forward to make sure it's sustainable, because that's one of the things that Lieutenant Governor Patrick and also Finance Chair Joan Huffman insist on, is that we have a sustainable tax cut. So we're good for at least half a dozen years, or I think for the rest of my life, quite frankly.
Yeah. Okay. So we would change, I mean, because we're getting to that. He mentioned the vote in November. So after we get all these through the Senate, and then if they pass the House, then it's going to be on a ballot, because we're voting to change the Constitution. So you usually think that's pretty long term.
Right. But what will happen is, the way we've got this set up, Amy, is that in November, if people vote yes, it hits the tax bill immediately, like really that same year. So if you vote yes, boom, your tax bill's down in November. That's about as best of a vote as I can arrange.
That it would be that quickly, because usually it's like, oh, it's next
year or whatever.
It's going to take 2 years to take effect.
Right,
Yeah.
That's right. So, but no, we're going to, actually will hit, all those exemptions will hit the tax bill immediately.
Okay.
For over 65 and regular homeowners.
Okay, so there is one more Senate bill. I know you said that mostly has to do with business. We're going to talk about that. We're going to talk about, again, a little bit more about what people may see on the ballot come November, and we will be right back. Welcome back to this episode of Ask Amy. We are talking about your property tax bills, and we're here with Senator Paul Bettencourt. So 3 Senate bills we've been discussing. We touched on 3, we touched on 4, and now you said Senate Bill 5 is all about businesses and what they pay in property taxes.
Right, and this is a critical component. There's what I call a nuisance tax. It's called business personal property. It's basically everything you see here, all the furniture and the fixtures. You have to render them on a form. You have to turn it into your appraisal district, and it takes a lot of time. So we're going to increase the exemption of that to $25,000. That means an average small business won't be paying any tax on it. But here's what they really get back. They get back not that only that exemption, which is about $500, but they get back their time. The IRS says to fill out a 2-page rendition form, it takes half a day, and to file it takes half a day. So just by getting rid of that for small business, that gives them back 1 full day out of a couple hundred in a year. And think about it, just by eliminating one little tax, the average business owner, man or woman, gets back a day of their time. That's really cool stuff. Now, we also have a blockbuster new inventory tax credit. People pay on inventories, businesses, manufacturers, et cetera, and they don't like it. And we're very non-competitive in the United States. We're uncompetitive from the standpoint of that we have a high inventory tax. So we're going to give them a credit off their franchise tax, which they probably hate as much as their property tax bill. So we're getting a 2-for-1 out of it. So it's really a novel feature, $1.5 billion. Senator Parker's carrying it. I'm riding shotgun on it. But it's a great package for business tax relief. Plus, they get compression too. Okay. Everybody, renters, apartments, everybody get that extra tax rate compression. So everybody in the state gets something out of Senate Bills 3, 4, and 5. Okay.
So we discussed briefly that there is, the House is working on a separate bill, and you're like, we don't really like that one, because what they want to do, they're taking it from the appraisal standpoint and basically saying that the appraisal district right now, they can, and they do, raise your property value by 10% every year. I mean, it's always going to go up 10%. At least it seems like it is. So they want to cap it and say that they can't, their cap is not 10%, but their cap is 5%.
Right.
That can't really go hand in hand with yours. It's kind of an either or.
Well, it's kind of an either or, because here's why. Look, it's a simple equation as tax assessor. The value times the rate equals the bill. If your value goes up and your tax rate stays the same, your bill goes up. But we changed all that in 2019. As the value goes up, the rate comes down, and we want tax rates to go down. When we started all this, we were the 3rd highest tax rate in the country. Only New Jersey and Illinois were higher, and they've got appraisal caps. And here's how it works. New Jersey got a 4% appraisal cap. So they hold down the value but they let the tax rate go to the moon, and then before your tax bill goes up. So that's why we chose the other path of cutting the exemptions. I mean, basically cutting off a chunk of your tax bill off by exemptions and lowering the rate down. Okay. And so we don't want anything that puts rate pressure back up, because what we're doing is lowering rates, because we don't want to be the third highest in the country. We drop to about ninth. We want to get down and keep going down, because that's how people make decisions of where to move jobs.
Right.
Big companies look and say, well, if the tax rate is low, I can go there. So, and if they worked, I would use them, but we gave this up 15 years ago because that's something that I knew as a tax assessor didn't work. And I'll give you an example. There's one group of people that appraisal cap will never help. That's the 2 million over 65 and disabled homes, because they're already frozen. So 2 million of the people can't be helped, and an appraisal cap doesn't help the remainder everywhere. It's only in markets where things are hot. And right now, like, maybe Harrison, Fort Bend are, but Austin and San Antonio are not. So we want something that helps everybody all over the state, no matter where they are. And that's why we're using exemptions and rate reduction in the Senate plan.
Okay. All right. So you guys have until May 29th to work all this out? Is that it? I mean, the last day of the legislature, is it May 29th?
I believe it's, Memorial Day. I think, right?
All right.
Okay,
and what I mean by that, it's already passed out of the Senate. Now it's sitting in the House. They need to approve it.
Well, the Senate plan is already in the House, so they either have to send their plan to us, which they've not been able to, they hadn't passed yet, or they should adopt the Senate plan. But no matter what happens, I predict the public will vote in November. You're going to get a chance to vote on this in November. So, Uncle Paul's advice is, if you get a shot, vote yes. But I don't know what you're voting on yet, but just keep aware of what will happen, because if you do, it will hit your tax bill immediately.
Right. So, we're discussing this now, and hopefully on the news you would hear more about it as it gets closer to Election Day.
That's right.
Because it's not going to appear on your ballot, most likely, as it's not going to say Senate Bill 3, 4, and 5.
No,
it's going to have some other language.
It will say a proposition. Now, by the way, we just had those propositions approved. I had two on the May ballot that the public approved 85 to 87%. One helped over 65s. Because their values aren't frozen anymore. Actually, this year they'll start coming down, their freeze values. And the public increased the homestead exemption from 25 to 40,000. So we've already passed all this. In fact, the House voted for all that unanimously. So I'm hoping that they'll change their mind and come back and support the Senate plan, and we can get all this to the public to vote on in November.
Is there any chance that the House passes 3 and 5, but not 4, or can they pass one and not the other, and it ends up on the ballot without all of these as a package?
Well, it's there's always a chance, and the difference is the package is $16.5 billion, $15 billion is already part of the budget. $1.5 billion, the business segment is coming out of a different fund. But the good news is that the House has a plan that's roughly the same size. They just they're using a tool that I don't think they can get the votes for to get the votes out on. So I believe we'll go to conference committee and something good will happen. I suspect that if for some reason we don't, we'll be back at a special session and probably, to solve it. Property tax relief of this magnitude is too big to ignore. Everybody's been paying a lifetime of taxes for over 65s, or they're just starting out, and we want to make sure that people stay in their homes. Or what about the small business person? Amy, we've got too much good relief here to let it sit. And we got too much money in the bank to let it go unnoticed. So I can tell you, Lieutenant Governor Patrick has said that he'll do whatever it takes to make sure we vote on these tax bills, because the public needs the relief. It's their money. We're giving it back to them. So we're going to do it.
Okay. I said that I would mention some criticisms. One, and this obviously from a layperson, not somebody who's been tax assessor, collector, studying all this for 10 years. But if we have $16.5 billion that we're looking at spreading out, and then we say on the Senate Bill 4 that each year we're going to ask the state to give the school districts $5.38 billion, right?
Right.
Aren't we running out of that $16.5 billion pretty quickly?
No, because we've actually budgeted 15 of it in the base budget, both the House and the Senate.
Okay.
So we've got it in our budget for that money.
Okay.
Going forward. in perpetuity.
Okay.
All right. And remember, we got it in our base budget. And but for extra insulation, we're asking the public, hey, let us grab it from the excess cash above our spending caps.
Right.
Can we take that money? And they'll say, I predict they'll say yes. And then even if all that has a problem, Amy, we haven't touched our rainy day funds. They're
Do you know how much is in there?
Billions, double-digit billions, well over 10 billion. Okay, so we haven't touched that. So we've got 3 layers of insulation here. We'll be fine long term. Trust me. I've been doing this for a long time, and so I know we have plenty of money to keep these tax cuts going. And remember, it won't cost school districts a dime.
All right. We are going to put links to all of those bills, Senate bills 3, 4, and 5, in our show notes so that you can read them for yourself and keep an eye out for them should they make it on the ballot in November. We'll hopefully update you before then to make sure that happens. Senator, thank you so much for coming in today.
Just want to tell everybody, live long and prosper. You will with these property tax bills. I trust me.
Have a great day.